Transmitting to you live from the Queen City, streaming to the world and beyond. This is the Traders Vibe Video Podcast Show. We talk and you listen. And now, here's your host, Carl Burgette, aka Chaos Trader.
All right, guys, welcome to the Traders Video Podcast Show. My name is Carl Burgette, also known as Chaos Trader 63. Every week, I will be bringing you some of the most prominent traders in the business. And today, I would like to bring to you Mr. Akil Stokes. Akil is a professional Forex trader, former money manager, and trading coach. He's also one of the co-founders of Tier 1 Trading, which was mentioned in Forbes Magazine as being one of the leading innovators in trading education. Akil is also a track and field coach at Millersville University and a proud husband and father of two beautiful kids. Akil, welcome to the show, my friend.
Welcome. Thank you so much for having me. And this is awesome. I'm excited. I'm excited
too. I've been looking forward to this all week. For some reason, I just couldn't wait to interview, basically because I found out about you a long time ago, but I've seen on social media this guy they keep talking about, Akil Stokes. Like, who is this guy? Because it was all over the place. So I had to find out who it was, and I found out who it is.
It's me. Nothing. Hope you're not disappointed.
No, never. Akil, let me start off by just could you tell us a little bit about your background as far as like who you are and how you got started in the trading?
Sure. I got started in trading. I don't want to say by accident, but I never thought I'd end up in the place where I'm at today. And I owe a lot of, I guess, to that journey to my father. Something that's a big concern of mine is the fact that overall in this world, I don't think we do a good job of really teaching financial responsibility and financial education. It's something that a lot of people don't come out of high school knowing, they don't come out of college knowing it. And because of that, they tend to make poor decisions in their life. And my dad was fortunate enough, or I was fortunate enough to have a father who took that seriously. So ever since a kid, he taught me about money. He taught me about, hey, when you get allowance, you put this much in a savings account. And back then, savings accounts used to give you interest. So you would make some money off of it. And he just kept taking me step by step through the process where we went through savings account to, certificate of deposits to money market accounts. And what happened was when I graduated college and I had a good sum of money saved up just because, I've worked my entire life. I'm also very frugal. So a combination of working a lot and not really spending it on anything. I just had money set aside. And I talked to him. I said, well, what's the next thing to do? He said, well, the next step is investing. So he really kind of pushed me towards getting some exposure to the market. And what was fortunate for me at that time, I was dating my girlfriend then, now wife, and her grandfather grandfather type figure was this local investor. He's a local investor in the market, local real estate investor. Later found out to know that he's like this millionaire guru, but you would never know by looking at him. And essentially, he wanted to meet me just to vet me. I'm dating his granddaughter essentially, and he wanted to go put me through kind of that drilling process and making sure I'm good enough for it. And
right.
During that process, he learned a lot about me and my mentality with business and entrepreneurship and just money. And I learned about him as well. And that ended up becoming my mentor. I basically spent that entire summer. I was unemployed because I graduated college at a very unfortunate time. And I said, hey, I'm just going to spend every single day of every single week during the summer just sitting in this guy's office and just, fly on the wall, just watching and taking notes, seeing how he operates. And that's how I kind of learned about investing. And eventually I got started in the stock market. I made some pretty good calls back then and ended up making the switch to Forex mainly because, I fell in love with investing. However, I didn't have enough capital to really make it a full-time gig with just trading stocks. So everyone at the time, they told me Forex, it's this new market. It's more aggressive. You can start with less. You can make more in less period of time. And I was like, hey, I'm good, so I'll be good at this. And didn't necessarily turn out that way at first, but eventually ended up finding my stride and becoming a consistently profitable trader. And I just fell in love with the game,
It takes time. I did the same thing almost. I started with pretty much with stocks, but I got into those penny stocks and stuff.
Yeah.
And, oh my gosh. But the thing is, like when I was trading stocks, it was, you could sit there when you first start, you don't know much, and you're like, you sitting at the charts all day, and the thing is not moving.
Yep.
So I was like, I needed something that moved more. And back then, when you started with Forex, it used to move a little more than it does now. You'll get more trends than you do now, but still, Forex was something you could trade every day, all day. So I kind of like that better than the stocks. How long have you been trading, Akil?
I started in 2007.
2007.
Yeah, 2007. So it's been a while now. Time flies. It's kind of crazy, but yeah. 2007 is when I first dipped in, and been doing it ever since.
So what's the difference between you 2007 you and you now, as far as trading?
Well, a lot of knowledge, a lot of experience. I think experience is so key. Although I am a rules-based trader, I do believe in intuition, and intuition, just like in any sport where you kind of, the market doesn't have too many tricks. So we see the same thing over and over again. And actually this pandemic is a great example, because this is very similar, a little bit worse, but very similar to what happened when, my trading career really first started, and I was trading during the recession back in that 2008, 2009 to 10 period. So having that experience allowed me to really keep my calm during periods like these, and really know exactly what to look for. And that's kind of a big macro example, but in a micro example, it's the same thing. The market only does so many things. It just does them in different ways. So The more experience you have, the more you can kind of dig through the junk and see what really matters. And I think it just gives you an advantage. So experience is one, and just mindset. I have a realistic view of what trading is. I'm no longer thinking I'm going to be a penny stock guru. I'm no longer thinking it's a get rich quick scheme, or, I'm going to make a 30% return every day, or some of the thoughts that I had back then. I understand what it is. I'm comfortable with what it is, and I'm able to maximize what I do in the market kind of under a realistic umbrella. And that kind of gives me stability and gives me peace of mind.
Right. So we'll go to the charts in a little bit, but before we do that, just give us a basic outline about your main trading concept. What would you say constitutes the essence of your trading philosophy?
Well, I'm a price action trader. So for the most part, naked charts. I'm not a big fan of indicators or anything like that. My general philosophy is that, you could be profitable in the market trading a million different ways. So I'm not bashing indicators or bashing fundamentals or anything like that, but I am a technical trader. I look at the price charts, I study price action, and I make decisions based off of that. I guess I would say the backbone of my philosophy is structure. So support and resistance, supply and demand, however you want to label it. That is going to be the most important element of a price chart for me. So every single decision that I make is based off of structure, whether it's my initial prediction of which direction I think the market's going to go in, whether it's where I get involved in the trade, whether it's stop placement, whether it's target placement. Structure is going to be at the middle of that. And if I don't have structure in my trade, it's very rare that I take an opportunity.
Structure. So somebody listening might not know what you mean structure. What do you mean structure?
So support and resistance level. So different price points in the market that have been tested repeatedly. So you can look at it as pivot points as well. So if you can imagine a bullish market, the point where a bullish market reverses and either turns into a bearish market or puts in a small retracement, kind of those V levels where it goes up and comes back down, or sometimes there are areas of consolidation where the market will go sideways. Right. But key levels where you can see pivots in the market, where you can see swings end and new swings begin.
Okay. So do you have like a daily routine? Like when you get up, what do you do? Do you do a routine, or you just go wing it, or what?
I used to wing it. Found out really early that was a bad idea. And ever since I started treating my trading like a business, I have a very strict routine. And believe it or not, the first thing I do is not look at my charts. I used to. I guess I should preface this. I'm an early bird. So I'm not one of those people that hits the snooze button a million times. I'm one of those people that, I wake up 5 minutes before the alarm goes off. I do a backflip. I run downstairs, and I'm just like fired up for the day. My wife hates it. She's like, you should not have that much energy in the morning. But I'm like, let's go. Yeah. So I'm one of those guys. I don't know if it's the old school 5 a.m. football practices that we had in college, but I'm up early in the morning. So initially I used to look at my charts and do analysis first thing. 'Cause again, I just love the markets. Like I get excited about checking the charts every day. But what I found was that although my body is awake, my mind is not fully awake at that time. So what I started doing was I started giving myself like a 30-minute wake up. So I don't check any charts unless I have an active position open that I need to manage. I won't check any charts until about 30 minutes after I wake up. So I may do some yoga. I may do, check emails. I may go on our platform, talk to a few traders, check the news, do something just to give my mind time to wake up, feel sharp. Then I approach the charts.
Right.
And what I'll do is I'll approach the charts. I'll do a normal top-down analysis. I follow a process called IPDE, where I want to identify where price is trading, what is price currently doing, what has price done. I want to predict what direction I think the market's going to go to. I want to decide if it's a trading opportunity I can take advantage of, and if it is, how can I do so? And then eventually I want to execute the trade. So I'll do that top-down analysis. I'll basically set up my higher time frame day so I know exactly what I need to watch for well in advance. Take a quick little breakfast break, watch some TV. Usually Sports Center has been kind of hard with the pandemic. They haven't been talking about much lately, but usually get my sports fix. And then I come back and I do some day trading and run a live trading room where I walk through the markets with traders for about 2.5 hours a day. And then I'll typically do something. I'll do some sort of physical fitness. I get away from my charts. I'll go for a workout, a run, a lift. I'm a sports nerd. I still like to stay in shape, but also it's a mental relief for me. It's kind of, I just spent the last probably 5 hours or 4 hours in the market. It's a time for me to kind of get away, clear the mind. If I had a good day, it's kind of celebrate that, but then not get too cocky. If I had a bad day, it's, maybe it's a tough workout where I get some of those frustrations, but it allows me to approach the market again for my next round of analysis with kind of a fresh slate. So
relieve some of that stress.
Yeah, and I think that's very important because the old me used to carry it with me, where I used to have a good day, and then all of a sudden I'm all afternoon I'm on fire, so I'm just taking random stuff because I can't lose. Or if I have a bad day, I'm like, I got to make it back right away. And again, that comes with the experience of kind of knowing what to expect from the market, understanding that good and bad days are going to happen. It's about a consistent approach.
So you're a mentor and a trader. And so basically what would separate you as a mentor and basically as a trader? If somebody wanted to come to you today and they said, Akil, I've been trying to trade the markets, blah, blah, blah. Why would they come to you? What separates you?
Well, two things. One, I give a realistic approach. I'm not going to BS you on anything. I don't want to say I don't care about selling you mentorship or selling you a course, but I honestly don't. And it's horrible from a business perspective. But I'm not trying to sell people anything. I'm trying to work with people that want to get better. So the fact is, I'm going to tell you how it is. I'm going to tell you what it takes. I'm going to tell you how long it takes to get there. And I'm going to lay it all out in front of you so that you can make the best decision on, hey, do I want to follow this journey? It was funny. I had a conversation years ago with a guy, and I was explaining the back testing phase where I'm like, yeah, it's this ruling phase where you're taking your rules and you're going through historical data and you're tracking data, and it's going to take forever. It's going to be frustrating. And he said, you know what? We got to the end of the conversation. He said, basically, I'm not willing to give that time up because I like playing video games. And it sounds foolish to some people where it's like, why would you choose video games over, trading? But the fact of the matter is, like, the guy was honest with himself. He knew that, he understood what type of dedication and what type of sacrifice it would take to become a consistently profitable trader. And he looked at himself. He said, I'm not willing to do that. Right. And I think that's a cool story because instead of kind of, doing things halfway and with a mediocre mindset and probably never achieving success because he's not going to dedicate his time to it, he saved himself a lot of time and probably a lot of money by just saying, hey, this isn't for me.
For real. That's a good story because basically, Akil, what that tells you is like everybody doesn't have that dedication to put in the time to become better. So some people come into the market, think it's going to be quick, get rich scheme. And next thing you know, they blew accounts and then they're done. You never see them again. You never hear from them again. But the story that you just said is where you put in that time and dedication. And that's part of being successful. So that time and dedication is part of being successful. But what do you feel like as far as the mental, the mental part of being successful? What is that? How do you control that? How do you achieve that?
I think it takes a massive amount of discipline and massive amount of openness. And I just got an email from a a client I used to work with who just has some pretty good success. And he says a relentless mindset. And I think I never really mentioned that before, but I think that's a good one. Being relentless, having that mindset where it's like, this is going to happen. I'm going to win. I may get knocked back a few times, but I'm going to keep getting up and keep fighting, because that's what the journey of success is. It's really, you get knocked back a step and then hopefully you go forward 2 steps. But discipline in psychology is key. In my opinion, it's the most important part of trading. I don't think it's hard to learn how to trade. Trading is a skill. I don't think that's very hard to learn. I don't think it's really hard to learn a strategy. There are millions of strategies out there that have an edge that you can use to become successful. I think the hard part is consistently executing that strategy. And that's going to be discipline. That's being able to take losing trades and understand that, hey, it's not a personal attack against me that they lost. It's just, that happens in the market. It loses. It takes being able to go through a streak of winners and keep your cool and not revenge trade. I think, most traders struggle because they sabotage themselves. They take targets early. They move stops back. They are scared to enter. They enter too quickly. All these small mistakes that add up, and that's all discipline. And I can't tell you how many traders I spoke to who have a very good system, but just can't find it within themselves, I guess, to execute it live. And
they can't execute
tough.
it. That's what you're saying. So basically, it's like, to be successful, you got to be, all those things are, so you could have the best system in the world. You and I could trade together today, doing the exact same system. You're sitting home, I'm sitting here. And at the end of the day, I might not be successful and you might be. And it might be just because my patience, my discipline, and so forth. I'm doing the things that you just talked about. I'm not doing those things. I'm getting out of trades early. I'm moving my stop loss back. I'm rushing to get into the trade. People think they can jump into the market and beat the market where I'm going to get in early. You got to wait for the move to happen. So That's all discipline, just like you were talking about. So Akil, you were talking about your strategy and so forth. So if a trader asked you, okay, so a lot of times people ask me, and I don't like the question because of what we just talked about. They'll ask me, what percentage will this get me if I'm trading this Ichimoku, or if I'm trading price action or whatever? What percentage of wins will I get? How would you answer that question?
I would say it varies. It's gonna depend on the trader. There's no set win percentage for every single strategy. It all depends on the dynamics of how you trade it. Kind of like what we just talked about. We could be trading the exact same strategy, but maybe I'm a little bit more conservative. You're a little bit more aggressive. Maybe I have a higher win percentage because I wait for more confirmation, but maybe you're more profitable because even though you have a lower win percentage, you involve yourself in more trades with a better risk reward profile. So there's never, ever a perfect win strategy. It's going to differ from trader to trader. I think what's important is that when you go through the testing process and you understand yourself as a trader, you have an idea of where you should be. If you're doing everything correctly, where you should be. And then when you relate your live stats to that, when you compare, you try to be as close to that level as possible.
Right. Yeah.
It's going to be a little bit of human error, obviously, in there. When you do your testing, it's hindsight, so you see every single thing. But if you could be as close to that level as possible, then that's good. I would say this as far as win percentage goes. I often say win percentage doesn't matter. It does, and that's from the psychological aspect. I can tell you this.
Psychologically, it does.
Yeah. I think I'm a very disciplined trader. I think I'm a very disciplined person in general. I can tell you right now, if I had a system that was the most profitable system I ever traded in my life, but it came with a 30% win percentage, I probably wouldn't be able to do it. Like I know myself. I need to see more than 3 wins out of every 10 trades. I know that I would sabotage it. Maybe I should give myself more credit, but I think it's important that you also know that threshold. At the same time, I can easily be a 40% trader where I can win 40% of the time and be completely happy with that. So I think each person kind of has to find that within themselves as well, because, they do want something that works. They do want something that is profitable, but at the same time, in order to, I guess, not put themselves in that position of psychological distress, you got to kind of gear the plan and gear the strategy towards that.
Right. So we're going to go to the charts, but just before we do that, let me ask you one more question that I want to know. So basically, Akil, if you have a losing streak, 3, 4, 5 losses in a row or more, whatever it may be, because I know I went into a 12. I lost 12 trades in a row at one time, and I was like, devastated for a little while, but I never gave up on my system because I knew that, well, it worked previously. I had to sit back and relax and see what was doing it, what was causing it. And sometimes it may be the system that you're not trading it properly, as far as like, it could be a trending system where the market's not trending, it's ranging, and you're still trading it as if it's a trending system. So how do you handle a losing streak?
I go out and do a really, really hard workout and try to put my frustration out elsewhere.
From them charts.
Exactly. But I do the same thing you talk about. The first thing I want to do is I want to check. I want to check, am I doing everything right? I talk about two types of drawdowns. There's the natural drawdown and the self-inflicted drawdown. The natural drawdown is where you're doing everything right. You're trading your plan correctly, and it's just not working. You're trading a trending strategy and the markets are ranging, and it's just, that chop will destroy trend traders.
Right.
And that's okay if it's natural. If it's self-inflicted, meaning that you're losing because you're making some sort of mistake, then the solution is you got to stop making that mistake.
Right.
You gotta
what that is.
You gotta find out what it is. You gotta ask yourself, why is this happening, and you have to fix it. But with the former example, something I like to do, and I did this. I did it last year as well as in 2014, where we were experiencing times of low volatility in the Forex market. It wasn't kind of like 2009, like you mentioned, where things were just booming everywhere. Yeah. And my secondary targets weren't being hit. And I was in an interesting position because my win percentage was the same as it usually was. But I was actually losing money because I just wasn't getting my secondary targets, my longer targets hit at the same rate that I was used to. So it was weird because I was looking at my stats. I'm like, I'm at the same percentage, but why is my return on investment less? And I dug into the stats. I analyzed what was happening. I had enough experience to kind of understand what the market was doing to how I was trading it. And I was able to make some adjustments. I made a big adjustment where I said, hey, I'm going to become more conservative. I'm no longer shooting for those bigger targets. I'm going to go one in, one out. I'm going to take my conservative target off. I'm going to take my whole profit there. And it ended up saving my trading for that year. So I think having the ability to really analyze the markets, but also analyze your strategy relative to the markets, I think that's big. And I think that's necessary because if a trader comes in thinking that the same thing is going to work the same way forever, you're fooling yourself. And I had that mindset, and I learned the hard way that, again, what I was doing in 2009, 2010, where, you can just push a button and things were booming. It had to change once we got into that era, once the euro dollar consolidated for 2 straight years. You had to be able to make adjustments.
So look, let's go to the charts. What we'll do is we'll go to your charts, and then you can run us through some things, and then we'll take some questions from other people.
All right, perfect. Let me do the little screen share thing. A habit of breaking technology. So let's see if it works here. Let me know if you guys are seeing it.
Yep, I'm seeing it.
Perfect. So this is going to be the euro yen. And I think this is a good example of kind of the philosophy that I have about trading. And I start off, I go through a 4-step process every single time I look at a price chart. And that process is going to be called identify, predict, decide, execute. So IPDE. So the first thing I want to do is I want to identify where price action is trading at. And I'm going to jump down just to a 4-hour chart to make it a little bit clearer for everyone here. Give me a second. Why are you not going? Of course, technology doesn't work when you need it to. Give me 1 second here. If not, I'll go to a secondary chart. There we go. So first thing I want to ask myself is, what is price action doing? You can see that price action is currently hugging our highs right here. So you can say that we're at a previous level of resistance, right? Price action has put in a pivot point, a swing point here. We've come down. We've retested that level up there, forming a double top. We've held there, and we're testing that for the 3rd straight time. Now, bigger picture, why I have a bullish bias about this. Like I said, I mentioned it, but I do have a bullish bias here. Why I have that bias is for a few other reasons. One, if we simply scroll back on the chart, you're going to see 2 things that have happened. One, you go all the way back, you're going to see that we're trading above previous structure highs right here. So these big red boxes are previous structure highs. The most recent move that we did was a higher high, higher close, moving from this swing low to this swing high. And then we came back to test that previous level of resistance, which is now acting as support. Now, what I'm looking forward to here is a potential breakout to the upside, right? Many people will see this and they'll look at a chart and say, well, Akil, price action hit this level 3 times. So because it hit this level of resistance more, it makes it stronger. That was a philosophy that I had for a very long time in the beginning of my trading career. And as I got experience in the market, I've completely switched. So I used to believe that the more times a level of structure is hit, the more important it is. If it's hit 2 times is better than 1 time, 3 times is better than 2 times, 4 times is better than 3 times. And my philosophy has actually changed on that. The more that a level of structure is hit kind of repeatedly, like you see here on the chart, the less powerful it is. Because ask yourself this question, and for the viewers watching, if this was a key point for selling pressure, right? If there was a lot of interest from the sellers at this level, would we be hanging out at this level for so long? Or would we have dropped by now?
Right.
Well, we probably would have dropped by now if this was a very strong level. So the fact that we're able to hover here doesn't give me a really good, I guess, prediction that we're going to see a lot of selling pressure. Add to that the recent move has created higher lows as well. So I'm actually expecting a breakout from this level. Now, if that being said, just because I'm expecting it doesn't mean that I'm trading it right away. And I think that's a big misconception that many traders make, where you make it just because you make a prediction, it means that you push the buy button and now you're in it. I want to wait for confirmation, right? So I like to say this. I like to be predictive in my analysis, but reactive in my execution. So what I want to see at this level is I want to look for some type of confirmation, and the confirmation I want to see is a higher high, higher close. I want this. I want a candlestick, a bullish candlestick, not only to break above the previous structure highs, but also close above, giving me confirmation that, hey, the bulls have won. They've defeated this level. Now, obviously, there could be a false breakout or whatever, but we're never going to, nothing is guaranteed in the market. So I want to wait for that. And then I want to wait for a pullback. And that's my preferred way of trading. So you can certainly trade the breakout. You can certainly put orders right on top of here. You can wait for a candle to break out and buy it right away. Just not my style. So I want to wait for a break and close above. I want to wait for price action to pull back into that previous level of resistance, which should now act as support. And then I want to be able to catch that move up higher. And if you look closely, we actually did something very similar. If I can delete my deal here real quick. I just updated I'm on Ninja Trader, just updated it. So all my kind of high.
Oh, that's Ninja Trader. I was going to ask you, what was it? Because it's nice.
This is Ninja Trader. Somehow I just did an update of it like 5 minutes before I logged on. So all my hotkeys and stuff are messed up. And
okay.
Happened. But we have a similar situation here where, again, previous level of structure here, right? As soon as we violate that level, boom, look for that pullback back into that level of structure, and then look for an opportunity to get to go higher. So if I jump out to a daily, I'll kind of give you an idea of where I'm looking for price action to go. Actually, I'll stick on the 4 hour. Excuse me for bouncing around some. But if I go to my 4 hour and just scrunch my charts up a little bit more.
Okay, what time frame do you trade basically?
I trade really the 4 hour and hourly. So I use the daily as my higher time frame. So that's where I get my top down analysis for the market. And then I'll go down to the lower time frame, the 4 hour and hourly for my execution. I'm having a problem. The charts are getting all weird for me here. So I'm going to stick on the daily. I apologize. But essentially, I'm looking for a move up to these highs right here. So if we can violate that level I showed you right down here, this is going to be that basically 122.60s area. I'm going to look for a move up to about 123.50s, maybe even 124 flat. That's my projection of where price would likely to go. So you can see how structure is taken into account. We're currently trading at a level of structure. Once I see the violation of that level of structure, it allows me to make a prediction on which way the market is likely to go. Once I can make that prediction, now I go about asking myself, well, how can I get involved? What do I need? Do I need a pullback? Do I need a double bottom, a higher high, higher close? And obviously, once I get that signal, I execute the trade, and I look to put myself in a good position to be involved with my prediction, and of course, a really good position as far as risk management goes.
So, Akil, you're basically a swing trader, right?
Yes. Now I do day trading as well. I do that for our live trading room. So those 3-hour sessions I told you about during the day, I do a lot of day trading there, but mainly I'm a swing trader.
Okay.
4-hour chart is kind of my go-to for that.
All right. Anything else you want to show us, or?
I could show you this. I'm going to go to a different platform real quick because this is giving me weird looks, but just to give you an idea of how to look for targets in this or how to make that projection. Give me a second to load over trading view right now. Euro, yen. If we're looking to make kind of a projection on where we're likely to go, again, we have this key level right here. So this is the level that I would anticipate price going to as far as a structural level. Something else that I use as well is I use Fibonacci's, right? So I can take my Fibonacci extension tool, or what's called a Fibonacci extension tool, and use this to make a projection on where price is likely to go next. So in this case, I'm going to swing it from my low right here to my high right here and back down. You're going to see I have a few Fibonacci levels that I can pay attention to. I have a 127 extension, which would be a conservative extension level. I have a 1618, which would be more of an aggressive one. I can also take a Fibonacci extension from kind of the micro move here, the lower move, this last swing low, the swing high right here and back down. And you're going to see I have a 1618 lining up right at that 127 extension, right? I can also take what's called an equal measured move. So if I take the length of this swing right here, swing low to swing high, and if I just copy and paste that onto here,
yes,
you're going to see that one-to-one measure move is going to line up right with that 1618 Fibonacci extension as well. So I don't use any one thing. Structure is kind of the baseline for everything, as I mentioned before. I will use different techniques in the market. And what I'm looking for in these instances, I'm looking for confluence. I'm looking, where do different things line up? Do I have a Fibonacci level that lines up with structure? Do I have an AB equals CD pattern that lines up with structure? So in this example right here, we have a 127 fib. We have a 1618 fib. We have a nice psychological number as well in 123 even. This would be a great place, in my opinion, for a conservative target. So if you're splitting your position, this is where I would take half my position off. If you're looking for an extended move, right underneath this 124 level where we have this 1618 and that AB equals CD pattern, again, looking left, structure leaves clues. That's going to be a good level to look for a secondary target projection. So my way of placing targets is really, I like to call it think like the other trader. So obviously I'm getting long in this or looking to get long in this opportunity. I start asking myself the question, if I were a trader who was looking to get short, where would I be interested? And typically those points where I would be interested in getting short, if I was on the sell side, those are the same areas you probably want to take targets at for being on the buy side. Right. So I don't really believe in kind of bullish or bearish analysis or trend continuation or counter trend analysis. I just believe in, no matter what type of trader you are, you have to do a general analysis. And if you're good at making predictions, it's going to help you out with obviously overall direction. It's going to help you out with entries, stops, and targets, kind of the full three things that we need to worry about.
Good. I love the food you gave us today, my friend.
Thank you.
So a lot of people should be able to understand what Akil was talking about. And if you don't, it's a lot of things he was talking about is just basically support and resistance, things that you should definitely need to know and should know to do any aspect of trade. I think that like when you're trading, even if you're trading like an indicator, if you look, those things all fall to support and resistance points. So that's going to be a strong thing in your trading. So before I let Akil go, I want to show you guys one thing. Make sure I got it here. All right, so this is tier 1. And so basically this is Akil's website.
Yep. So that's the homepage for basically our trial membership. And that's something that we advise every trader does. And what our trial membership is, it's a 14-day trial on the platform. It costs you $1. The reason we charge $1 is because we've noticed that if you charge the littlest amount of money, it keeps kind of the trolls away, the people that just want to go in there and start problems. It's funny, but honestly, it really does.
No, it's true. Yeah, I believe it.
But I advise signing up for that for two reasons, and the main reason being this. One, it's going to give you 14 days of free education. And if you are serious about, becoming a better trader, why aren't you going to invest $1 in your education and getting better? Two, if you are someone that maybe sees yourself working with us, it gives you a chance to get a feel, get a lay of the land before you go. I mean, learning to trade is, although I think we have a very good program, we've had very good results with our traders. Everyone's different. Everyone requires something different. You may not be into our style of trading. You may be into a different style. And I think having that period to kind of feel things out, try it, talk to our network, talk to our community, talk to traders that have been with us, and kind of get the real deal impression is big before making any type of decision.
Yeah.
So I would advise doing that. The first thing I would do once you sign up is introduce yourself to our community. That is, we do a great job of teaching, obviously, but what we're most proud about is really the network and the community of traders that we have, where it's real traders, it is inspired traders, motivational traders, and everyone is trying to help each other out. And that's it's a cool environment to be in. It essentially creates its own accountability, and it's like having a mastermind group to push you forward. I know they inspire me as well.
Trading could be a lonely business.
It really is. I thank them every day just for, I tell them it keeps me disciplined. Doing what I'm doing, I know that I can't make a mistake because if I do, they're going to call me out. So I've got to hold myself accountable just for the pure fact that, I have to be a good example for our group and our network. And I know they do the same thing. So
yes,
it's an amazing environment. Check it out. You get access to a course, you get access to 2 different live rooms, software, all this fun stuff. And again, there's no kind of sleazy auto bill or anything like that. After 14 days, boom, you just lose access. There's no bill that ends up on your statement. You're just gone unless you decide to kind of stay on, of course.
Well, I'm going to tell you, I enjoyed having Akil on the show. One thing I know about him, I've been following him a little bit, not a lot, a little bit, a lot. I follow him a lot. I'm one of his undercover followers, so he doesn't know, but I see him a lot online, and a lot of the stuff he talks about and the way he teaches you guys, man, it's something that you may want to think about investing in to help you to become a more successful trader, because if anyone could help you and show you, it's definitely going to be Akil. So I appreciate having him on the show today. And I appreciate everyone for attending today. So till next time, guys, have a great one and God bless. Thank you, Akil.
Hey, thank you so much.
So long.